Go. All right, what is going on, my friends? Welcome back to another Dividend Happy Hour. Cheers. Here's to you guys. I hope you all had a fantastic week. Tonight, I am joined by my good friend, Russ, aka Punk Rock Russ, as I like to call him. I don't know, maybe we need to give you a better nickname, man. But Russ, how you doing tonight?
Dude, I don't have any nicknames. Little Rusty, they call me at work because I'm 6'4". I'm doing good, man. Sober October's almost over, our third annual. So I'm drinking my PepsiCo, my bubbly. And yeah, Halloween night, I'm ending it. Dude, I can't wait. Halloween's my favorite time of the year. I have my Captain Harlock shirt on. For those of you that don't know, it was a cartoon in the 1970s and made famous by Glenn Danzig. If you see old pictures of Glenn Danzig, singer of the Misfits, he's wearing the Captain Harlock.
So yeah, is that kind of because the Misfits have kind of a similar logo to what's on your shirt? I wonder if there's some inspiration there.
I'm sure there is. I don't know. Yeah. Everybody steals everything. There's nothing original in the world. Everything has been said and done before. It's just different ways of doing and saying those things. So yeah, man. Happy to be here. Thank you for having me on.
Thanks for coming on, man. So we have a fun episode planned tonight, guys. Russ and I, in a couple of minutes, we're going to get into, as you saw in the title, the future of dividend investing. What is this next year on the market going to look like? This time next year, October 2023, is it going to be higher? Is it going to be lower? And, based on what we think there, I'm interested to hear what Russ says. But, even more so, I'm curious to hear if it's going to be lower, which stocks are we going to be picking up at a discount? Which ones are we most looking forward to buying? And so that's what we're going to talk about in today's video. Then we'll get into some Q&A. But before we get to that, guys, I want to do some quick shout outs to all of you guys who are here in the stream so far, just to say quick what's up. We got Charles in here. We've got Kevin. We've got Mountain High, Captain Suburbia, Chris. Who else we got? Phil, Anthony, Caleb, Chris P, Zaldath, Jay, Kevin Burgess, Craig. Guys, thank you so much for tuning in tonight. And if you are sipping something good for tonight's Dividend Happy Hour, let us know in the live chat what you're drinking. I've got a nice, cool Modelo here. I don't drink these that often, but I figured I'd bust one out. Russ is coming on. It's a special occasion, so.
Busting out the gold label, man. It's got gold foil on the neck. It's good if it has gold foil.
Honestly, man, I don't like the gold foil. Sometimes it ends up in my mouth from sipping on this. And
sounds like there could be a lawsuit there. Okay.
Yeah, it's just not a good thing, man. So anyway, before we get into tonight's main event, guys, I do want to do some quick shout outs real quick. So I missed this last week, but you guys know every single week I like to shout you guys out, any accomplishments, any milestones that you hit in your portfolio. I'd like to recognize here on the Dividend Happy Hour. So we're going to go through a couple of those, starting with this first one right here, guys, from Ex-Dividend Dad, who says, my purchases yesterday got me over an important number for me in my actively managed portfolio. I had $567 in dividends calculated for my portfolio at the start of the year. Now the current calculated amount is $1,574.99, an increase of over $1,000 since the start of the year. That's pretty dang crazy. So just from January 1st until now, he's increased his income by $1,000, which can only be done by consistent dollar cost averaging. Wouldn't you say, Russ?
Dude, absolutely. I love that, man. It just shows the power of compounding, getting your interest, earning interest. That's where the magic happens, baby. That's the magic. Interest, earning interest.
Go. Like this time next year, too, like you keep it up, you might be up $1,500 in dividend income in the same amount of time. Like that's the crazy thing. It just grows, exponentially, which is so cool. But anyway, moving on to this second one. This is from Beowulf, who says, I bought some more Gain and Altria Group, getting my annual dividend income up to $1,200, guys, which is an average of $100 per month, which is great, which is a milestone that I've been looking forward to. So Beowulf, good job, man. And then we have this last one right here from Bopti, who says, a new high for me, closing into my first milestone of $100 of dividends a year. Not much, but you got to start somewhere. And that's true. Like we all, started at the same place, but what are you going to do? You just got to keep investing. And sure enough, that $100 a year is going to grow to 1,000, then 10,000. Then, hopefully we live to, see it reach $100,000 a year, which is,
dude,
that'd be
insane. Huge shout out to Bopti, man. You keep going. Everybody had to start somewhere. Everybody had to start at that first dollar of dividend income. And just keep it gets addictive. I'm a full-blown addict. I mean,
Yeah.
I'm constantly scrounging, looking for money, walking around the house like, what am I going to buy next?
Yeah.
It's an
And
addiction,
honestly,
and I love it. It's a good addiction. It's healthy.
oh, dude, absolutely. It teaches you so much. Like you learn a lot about just other things through investing. I mean, delayed gratification, patience, discipline, financial prudence. Like that's all good stuff you learn from being a dividend investor. And like you said, man, it gets
Watching
so
your
addicting
portfolio
once,
be down 20% and being happy about it.
yeah, I know we are definitely like a unique bunch, huh? But anyway, that's pretty much all I had in terms of the shout out. So you guys keep up the great work. I'm very proud of what you guys are all doing out there. So keep it up. And with that, let's do a quick cheers, Russ. What should we cheers to tonight?
Oh my God. You always catch. I should have something. I don't know. Well, you're in Vegas, right? So cheers to all the people that are in Vegas right now. Hopefully they're making
cheers to
money.
Vegas. Let's also cheers to Intel, who had a really nice week. Did you see what happened with Intel this week?
Yeah, they beat earnings. I don't remember the number, 26 cents or something it might have been.
Yeah.
But dude, 10 everybody is excited, I'm guessing, about them saying they're going to cut 10 billion over the next 3 years. They're going to, or in cost reduction. So
yeah,
everybody loves that. But I don't know. They lowered their forward guidance, of course. And dude, it's going to be highly competitive, but that dividend yield is over 5%. And I think they're at a spot right now that they're cheap enough where there's not as much risk if you're like me holding from $47. But yeah, I think they're like a surfer waiting in the waves outside of Pacific Beach down there in SoCal, where I used to hang out, waiting for that semiconductor wave to ride again. And I think it's going to happen. It's just going to take some time. And hopefully they're going to be competitive. All the money they're investing in the foundries, but the foundries have a different cost structure, right? So it's a little bit different. I wouldn't say a fundamental change in their business, but it's just different. They want to start making the, fabbing the chips for like NVIDIA and other companies. And I don't know, man. I think it's good. I should be adding more. And of course, now when it goes up, I'm like, I knew I should have added at 25, but I'm holding. I think they're going to come back around. What do you guys think about Intel?
I've been feeling that about Intel, and I've been kind of thinking about that starting this week about AT&T again.
Oh boy. Oh boy.
I know. But yeah, I mean, what do you guys think about both of these stocks, really, AT&T and Intel, in the live chat? We'd be curious to hear what you guys think. Maybe we'll circle back to this after we get through the main event, which is simply asked, Russ, like this time next year, like end of October 2023, what do you think is going to happen from now until then? Do you think, I mean, obviously we're going to see our ups and downs, right? But do you think we're going to see more downs in the next year in the market, or do you think we're going to see more ups? And I know it's hard to predict, but just based on how things have been going, what does your instinct tell you is going to happen?
Yeah, I have absolutely no idea. So anyway, great show, guys. Thanks a lot.
Yeah, that's call it a night. Yeah, there we go.
Anyway, I really think it's going to be volatile. I think there's just going to be a lot of ups, a lot of downs. We're going to see this like these short bear market rallies where you got shorts covering, pushing the prices up, but then I think it's going to turn. I was thinking about Intel again, cutting the jobs, and how people like that they're cutting, letting people go to preserve. Pat Gelsinger had a fun term for it, and it was complete CEO speak. And if anyone remembers what he said, it was like, I won't even try, but it was a really nice way of saying we're just going to be letting people go. And I remember a time when every time companies axed people and laid people off, everyone thought it was good and their stock price would go up, until reality set in and people realized that when people aren't working, they're not really spending that much money, and then the market tanked. So I think we're going to see a lot of, a little bit of up here in the short term, but this is, this will just tie into me saying that uncertainty is always on the table. Like that's the one thing, we just don't know what's going to happen. Obviously death and taxes, but some people don't even pay taxes. So you could probably put an asterisk next to that. But as a dividend growth investor, I'm hoping for more down, because I was just thinking I might be going into 200 shares of Realty Income, and I'd like that under $60. So, man, we'll see.
Is that happening from options, or how are you going to come into
will,
those shares?
Yeah. Hopefully it will. So this is the risky part with options is I had 100 shares of JPM. I had a covered call that expired in the money a week ago for $122 a share. So I got 12,200. And so I just got that cash sitting there. And I sold when Starbucks dropped on Monday, was it, or Tuesday? From Xi Jinping. I can't say his name now.
Yeah, right.
Yeah. A lot of uncertainty in China. So Starbucks was down around 82. So I sold a cash secured put, meaning I was telling somebody I'm willing to take 100 shares of Starbucks off your hands. Come this Friday was the expiration date for $82 a share, 8,200. And then I looked at the chart, and again, charting is all just, I won't swear, but it's BS that sometimes does what you think it's going to do. Remind me about PepsiCo later. I have an interesting story from today, but yeah, anyway, so with Realty Income, I think I want to use that. So $60 a share, what is that, 6,000. So it'd be almost exactly what I had from JP Morgan. I could get 200 shares. I would probably sell a cash secured put for $60 and hope it actually closes under that. And, but I would be buying it at $60 a share. So I'm still going to see with that. I'm going to look at it next week, see where things are. But sometimes it makes more sense to you wish you would have just bought the shares outright, because they'll start taking off or they'll just start dropping in price. But anyway, I don't know. I was thinking, I don't think I'd mind owning 200 shares of the Big O,
Yeah. No, I don't blame you, man.
To tie a bow on that whole big, long jibber jab, yeah, I think there's going to be a lot of volatility. And, man, on those big down red days, I'm going to be looking to buy. And I think we can, because when the stock price drops, the yield pops and investors get more bang for the buck. So I don't know. That's kind of my thoughts on that, everybody. What do you guys think is going to happen with this crazy market we're in?
Yeah, let us know in the live chat there, and also in the comments below if you're watching the replay. What do you guys predict is going to be going on this next year? 2022, I mean, this is probably true with every single year, but 2022 has just been full of twists and turns. It's been a crazy year on the stock market. I know, pretty much throughout the course of the year, Russ, like I saw my portfolio go from like 10% up 10% overall to down 10% overall. And now today, just throughout the course of the week, it's bounced back up to just barely being in the green overall. So it's been a roller coaster, man. And it's been really interesting. Like I can say this is probably my first time since I started seriously investing that I've gone through so much turbulence. And it's been, and you hear a lot about this too, like during these times, the increased fear, like how people react. A lot of people sell out or whatever. And so going into, a lot of this, I was kind of interested to see how I start to feel after seeing, so much red and seeing some of these positions like Intel was down at nearly 50% in my portfolio. But surprisingly, man, I was cool as a cucumber. Like I haven't once through any of the craziness we've seen this year, even these last few months, been like, man, I'm thinking about selling out of this or that, or it's dropping too much. So, I want to get out before I lose all my money.
Well, you know what it is? A lot of it is, a lot of it for me is realizing that we're just holding on to businesses and companies, not tickers, not ticker symbols on a screen. Like these are actual businesses, and the share price changes hundreds of times a day, but that's the price. The value of the company isn't changing hundreds of times a day. I mean, it could sometimes take years for the value of a company to change. So it's really easy as you're a dividend investor and you're buying companies. And like I say, buying and holding these companies for their cash flow, it's just so easy. And that's why you said cool as a cucumber, which, I like cool cucumbers. I like pickles too. I love pickles. Grillo's pickles are some great pickles.
I hate pickles.
Oh, no.
I'm sorry, man. I know I just went down a couple notches in your book. I don't get them. Everything from the way they look to the way they taste to even the name pickle. It just sounds disgusting. So More for you, I guess.
Oh
Sorry,
no,
man. I
good
didn't mean
for
to
me.
cut- I didn't
More
mean-
for me.
I
I'm
didn't
going to
mean
start a
cut you
pickle
off.
company.
I didn't
No,
mean to
it's
cut you
okay.
off.
This
but
is
obviously-
this is important information that we need to know and we need to discuss. This needs to be brought out now. So, I don't know what I was saying. Companies that
I'm
oh
sorry,
yeah,
man.
price
My
and
bad.
value, right? The big buff dog, the sage, the oracle of Omaha, Nebraska says, what does he say? Price is what you pay, value is what
Value
you
is
get.
what you get.
So,
Classic.
yeah, that's kind of what that means. So,
Yeah.
but I'm not as smart as Buff. I'm not as smart as him to have that killer intrinsic value, which by the way, the dude's sitting on a ton of cash, I hear these days. So I think, does anyone remember? I think November 15th, every 3 months, the 13Fs, I think November 15th might be the 13F day. So I'm going to be looking for that. I'll probably do some kind of video or something when that drops.
Yeah.
But everybody does it. You'll see. You'll know when the 13Fs drop, when all of a sudden all the YouTube channels you follow just start doing what Warren Buffett bought and sold. It's like, 13F day.
Well, it is super interesting, man. It's Ally specifically, Ally Financial, they picked up probably a lot of recognition just from being in Buffett's portfolio, right? Like they've been getting talked about a lot. I talked about them in my last video, but I've seen Ally all over the place.
Yeah. There's it's funny. I will say though, for anybody that's new, don't ever buy something just because you saw it in a 13F that one of these big hedge funds has it, because we're pretty much getting stale information. So all that a 13F is, it's just a snapshot. That was the air quotes. It's a snapshot of that day that they filed with the SEC. And then we don't get that sometimes for it's like 30 or 45 days later. So literally the next day after they filed that, they could have blown out of some of those positions, and then you come and buy it like 30 days later. So yeah, use it for ideas. When you see Berkshire buying or selling something, it's so cool to say like, why? But don't ever do, well, Buffett sold, I'm going to sell. So that's my thoughts on that. That's all I got to say about that.
Yeah. So going back to like one of the main points that you were making a couple minutes ago, talking about just looking at these stocks as businesses, as pieces of ownership, little slivers of ownership in these huge businesses. When you look at it from that lens, I mean, is it even worth, and I know, like, obviously when we make these predictions, is the market going to be up? Is it going to be down? I know we don't know. No one knows. But it is like, when you look at these stocks from the lens that I just talked about, is it even worth paying attention to any of the macro stuff, the interest rates, the inflation, the wars, all that stuff? Is it even worth your time, or do you think you're better off just focusing on the fundamentals of each individual business and looking at the financials and using that as your basis, and not even focusing on anything else?
Yeah, yes and no. We know the interest rates are going to fluctuate. There's that saying, don't fight the Fed. We know that the Fed basically was saying, there it goes, basically saying that they want to break the economy. So don't fight the Fed. When they wanted the economy to grow, they're giving people money. The government's giving people money, but, they're lowering rates, near zero interest rates. Yeah, man, there's always something going on. But I guess the way to look at it is, whatever big thing that's happening, is that going to affect the business 5-10 years down the line? Like Starbucks, that one was a little bit, iffy, because Starbucks is doing their reinvention. They just opened last month their 6,000th store in China. And if, the PRC, if that, the Communist Party all of a sudden says, yeah, we're just going to nationalize everything, and there's no more, private business, then that's really going to hurt Starbucks and their plans for growth. So something like that could change their trajectory, but I don't think that's going to crush them as a business. It's going to be a headwind for a little while. But you know what? I mean, again, it just comes back. We're just amateurs. I'm just an amateur. I don't know what's going to happen, but I do know that PepsiCo, well, I'm guessing that PepsiCo is still going to be selling products to people. Companies like Kimberly-Clark and Procter Gamble are going to be wiping butts and blowing noses. So, you know what I mean? Like, I like to look at it that way. And if I think a company is going to be in demand, if Coca-Cola is still going to be dominating the beverage industry, then I'm not worried at all, and we can look, we start to look at their cash flows. Is it going to be dwindling? Looking forward into the future, I guess, is because whatever we look at what happened, whether it's through a chart or through earnings reports or anything, that's all stuff in the past. And the most important thing is in the future, which obviously comes right back to what we said. Nobody knows for certain what's going to happen in the future. So, it's just taking educated risks, I guess,
So hypothetically, I mean, if we were to see more red than green in this next year, are there any stocks in particular you'd be looking to pick up and add to, where you might not otherwise have an opportunity to do so at a discount?
Yeah, so I've been buying Texas Instruments, and I'd love to get them under 140. I've been buying them in the 140s. There's also Procter and Gamble. I would love to get them under $100. That's one I would load the truck up on.
Absolutely.
And
they might be at 3% yield at that point, don't you think? They might be at 3% yield if they got under $100 per share.
I think so. What are they right now? I'll look. I think Procter, they're 2.7% right now. So for certain, and they are at $135 a share.
Yeah.
So
they'd be. What is it? That'd be at a 3.65% yield.
Yeah. Target's another one. I'd love Target in. It hasn't gotten there. My guy, European dividend growth investor, was thinking they could go into the 1-teens or single, 100s. And I would be buying heavy there. I bought at 139. I think 139.99. I bought a few shares. The low price of 139.99. I'd love to see Target on the clearance aisle, man. I would be picking that up. I'd be loading up the what are they backing up the truck? They say back that thing up.
So you started buying back in you started buying Target back in July or so, June, July. Okay.
It was the end of June, and I know because I bought that share on the deck of our rental in Ozarks, Lake of the Ozarks. Okay. Yeah, and I wish I would have bought more, but I thought it was going to go lower. And, oh well.
Man, Target's had an interesting few months.
Dude, that's my souvenir. I just thought of it. That's my souvenir. Other people, like my kids, wanted this. Like my sister-in-law wanted to go shopping and get souvenirs. What did Daddy buy? Daddy bought a couple shares of Target, and I still have it, and it's paying me money. And God, I love it. That's a great idea. Buy yourself some souvenirs.
So Procter and Gamble, maybe some more Target. That's kind of
absolutely
what you have your eye on, yeah.
And now those are positions I already have. As far as new positions, I don't know. What about you? Anything new? Anybody watching?
Procter and Gamble for sure. Yeah, let us know in the live chat or in the comments below, guys. Like what's top of your list? If you had like your dividend investing wish list, things just plummet. You've got your pick of the litter. What stock are you going with? If you had to just buy one, what is it? What's top of your list there? Let us know. Dude, I would say honestly, probably if things really go down, like I'd probably start a position in Apple. Probably above anything else right now.
Yeah.
Target would be up there for me as well.
Dude, they crushed it. They had $394 billion of revenue in their fiscal year. That's insane. That's nuts.
Probably that, maybe like Bank of America, but nothing crazy, man. I feel very content with where my portfolio is at right now.
I do know one, Hershey. I'd love to start a position in Hershey, but they are always at a premium. Dude, I got out of the shower tonight. My underarm deodorant is Old Spice, Procter & Gamble. My aftershave gel, Gillette, Procter & Gamble. And then I use this, my kids have it, my teenage daughters, and I steal it from them. It's this spray-in conditioner, Pantene, Procter & Gamble. I'm like, is there anything in this bathroom that's not Procter & Gamble? It's this it's actually almost kind of creepy. Like every time I turn a bottle or something, it's like I see that the P&G.
They're everywhere. You can't
everywhere.
escape Procter and Gamble. You can't escape them. In fact, if I had to own just one stock, it might be Procter and Gamble. Like I might choose that one.
It's solid, man. It's just so solid, you know. So that'd probably be if I had to pick one, that would be the top of my list. In a complete market meltdown would be the old PG.
Now let's see what some of the people in the chat have to say here. So TT, that's how you pronounce it, is choosing Johnson & Johnson, which is a great choice. I think 59 years of dividend growth at this point. You can't go wrong with some J&J.
That's interesting, though, because they're going to be spinning off the consumer health segment, and they're going to be mostly a pharmaceutical company. The medical devices and the pharmaceuticals is going to be one entity, and then we're going to get shares of the consumer health, which could unlock value because, you know, that's the problem with a lot of the conglomerates is people want to invest in just one thing. Like if somebody just wanted to invest in Warner Brothers, but they didn't want to invest in everything else that AT&T did, well, you'd have to buy a share of AT&T. So that's what they talk about, unlocking value sometimes. And J&J, though, I think they're still going to be solid.
And so we could possibly see the new consumer business probably start to acquire some other brands, maybe go in the route of like a Procter & Gamble or a Kimberly-Clark, right?
Yeah, that's going to be fun to watch, man. They're going to have their own, board and CEO, and it's going to be its own little baby company that's going to do its thing. And it's not going to have to come to the. Well, you think of it like the parent has to run everything and make decisions, but sometimes it doesn't work though. Like I always say, it's not swearing. I always say that like Realty Income, they merged with Verit and they shat out. ONL, Orion Office Properties.
Yeah, right. It's
done terrible.
Where was Viatris from?
Pfizer,
okay.
Yeah, I think it was like I think it was Viatris and Upjohn got spun out of Pfizer, I believe. Somebody correct me if I'm wrong.
Okay.
But yeah, it's J&J. Going to be a fun watch.
And then moving on to the next one here, Kevin says he's going to pick up some UGI. UGI is they're an insurance company, right?
I think you're thinking of the other U one. So UGI is they own AmeriGas. They are they're a utility. And you are thinking of I can't think of it. It starts with a U.
Unum. I'm thinking of Unum.
Unum Group. Yep, there we go.
Yeah, so UGI distributes, stores, transports, and markets energy products and related services in the United States. Yeah, so they got the propane. Okay. What are their
propane cash?
Like? Yeah.
So I don't know if you guys have stats. If you guys have heard that, I see them. Yeah.
Yeah, those are nice. Sorry, 4%. Man. Go ahead.
Oh, it was just stupid. That's what I'm talking about for the Dividend Happy Hour. Hank Trill. Well, you guys, after this, YouTube Hank Trill, and there's a couple songs on there. My brother-in-law was playing for me over the summer. Just hysterical. One of them is like because Hank Hill did like propane. So this guy does the Hank Hill voice. He calls himself Hank Trill, and he has like these hip hop songs. Hysterical. So, anyway, AmeriGas. They do gas. We need a gas. Dude,
gotta have those barbecues.
It's like you need a medical supply. That was from one of my favorite movies, Return of the Living Dead. Yeah. Anyway, I won't. I could do a whole thing on horror movies, but we'll keep it to dividend investing. Who's that? I hear a car horn.
Yeah, man.
Is that you?
I think no, it was my cat. He's going out for a spin. Okay, moving on. Wallet Invest is going to pick up some classic VTI. When you can't choose one, just buy them all.
Beautiful.
That's what you get with VTI. 4,000 different stocks in that ETF. Pretty crazy. Some homeless man here says he'd love to get some Realty Income or JEPI. JEPI's not a bad one to just buy right now. I mean, I can tell you, I know my JEPI position is definitely down this year. Don't you have some JEPI in your portfolio, Russ?
I don't. I have the only ETFs that I have in what I share on the channel is my kid's wedding. We started a wedding account. And I kind of wanted to do an experiment. I honestly think this was just an excuse for me to to buy some more dividend stocks on the, trick my wife into showing like, hey, we got to funnel money into the kid's wedding account. So I'm doing $50 per kid per month. So $100, and I'm splitting that between SCHD and DIVO, DIVO, which for people that are old like me, you remember DIVO, the guys with the hats, and you must whip it good. Da-na-na-na-na. And they, I hope we don't get flagged for that. That was pretty spot on, dude. I think the algorithm might think we're playing some DIVO around here, but DIVO, they own a lot of the blue chip companies that I would normally own, and they sell covered calls on them. And I don't know if they sell cash secured puts. I don't remember that, but I know for certain they sell calls, and then they pay dividends out from the premium they receive on that. But yeah, they're selling calls on like J&J, Procter Gamble, Texas Instruments, like solid dividend paying companies, which I think is good, because if the market takes a dump and you're stuck with them, at least they're good companies paying a dividend still. So
yeah. So it sounds like they have kind of a similar strategy to like a JEPI. The yield's lower, it looks like, but they're writing options on different companies. Like JEPI would be more like an Apple, Microsoft, those sort of stocks. But
there you go.
Yeah,
see?
like you said, we got some Chevron, Johnson & Johnson, Home Depot,
McDonald's, P&G.
Procter Gamble. Yep. Nice.
That's why I wanted to have them. So it's been good so far. But yeah.
Yeah. Good, man. I've never actually looked into this ETF, but those top 10 holdings look pretty solid. And I wonder if it's like JEPI. So I think JEPI, they'll be long on those positions, but then they'll write covered calls on like, half of the position size or something like that. I don't know exactly how it works to a T, but it seems like it's pretty similar. That's cool.
Yeah, I've actually never looked into JEPI. I know I've seen you talk about them in a few other channels, but...
Yeah, I might make another video on them soon, just kind of an update, because I've held them for the better part of the year now, so it'd be interesting to show
actually, that gives me an idea. That sounds like I need to do a DIVO video, a DIVO, how you can sell covered calls with no experience. There it is.
Dude, how you can whip your dividend income, how you can whip it into shape with DIVO.
That's going to be lost on so many people. I'm surprised you know that. You know that song, right?
Yeah.
Okay.
You could whip it. What else do they sing? So there's another DIVO song that...
Freedom of Choice. You're probably thinking of Freedom of Choice. The Girl You Want. I think it's The Girl You Want is another song they sing that was covered by... I forget, some dude in the 90s. Popular guy.
Did you know they're from Akron?
I didn't know they were from Akron. I know they're an old school punk band that has a lot of songs, but yeah, they had that one big, hit that everyone plays. So in the eyes of the world, they're a one-hit wonder, but that's okay.
Okay, moving on.
Yeah. Let's move it.
Getting back to the dividends, man. Jake here is going to take a page out of your playbook, and he's going to pick up some more realty income. Nice. Great choice. Can't go wrong there. Johnny, top of his list is some BP. BP.L. Is that just British Petroleum, or is that something else here?
I don't know what the .L is.
Well, I don't know, but this is what Seeking Alpha is pulling. Let's go over to the screen here. So Seeking Alpha is pulling up just BP. I'm guessing it's the same company. In the energy, yeah, BP. What's their dividend stats looking like? Got a nice high yield, very low payout ratio, and let's see, looks like they recently cut it. So that's not great. They cut it back in 2020.
Yeah, and I bought some, and I wish I would have held.
Oh, you did?
Yeah, I bought like 5 or 6 shares right after they cut it, and everyone tanked them. But, dude, I was buying Exxon at like 30-something a share and 40-something a share. And, dude, that's crazy that I'm almost up $100 a share on Exxon, which hit all-time highs again this week. Yeah. A lot of stuff hitting all-time. Dude, Pepsi hit a new all-time high. I almost had the shares called away today because I looked at the chart and I got cute with the resistance level, and their previous all-time high was 181.07. So I sold a covered call for 182.50, and I sold it for $21. And this was on Tuesday, I believe. And today you should have seen the heartburn surprise I had when Pepsi was at like 182.90. And anyway, it came down a little bit, and I bought it back for $14. So I made $5.70 after paying a 65-cent fee each way on on Schwab. But yeah, it sucks because, as you guys know, my cost basis on those 100 shares is like 150 and 37 cents. Call it $150. So I would have had to pay capital gains on like $3,200, and I didn't want to do that. So I was either going to roll it up or out, or just, I think I'm done for a little bit here because it's crazy, dude. It just keeps going high, and I'm hoping they split eventually. I'm hoping they go over 200 and they split their stock, get more people in.
Have they ever split it?
Yeah, they have. I don't remember when. I'm sure I could look that up here, but yeah, they've split before. Okay. Fill me in. I'm trying to. I don't remember where to find it.
Okay, I'll move on to the next one for now.
Yeah.
Craig here. Craig said he's going to pick up some Lockheed Martin, which is another stock that's done pretty well recently. I've noticed my position had a huge jump. I mean, look at this price chart right here. Just in the last few days,
it went nuts.
It's gone up like $100 a share. That's crazy. Dang! In the last month, they're up 22.5%. That is wild. What is it that? Is there anything that in particular
let me
that
teach
made
you
them
something.
jump so much?
Let me teach you something that I will. Well, yeah. So I don't know exactly why they jumped. I saw that and I didn't look into it. But if you go to Seek in Alpha, you can see the splits. So it's under. Just go to any company. If you want to go to Pepsi.
Okay.
Put in old Pep.
Okay.
And it's weird, under charting all the way to the right. So you'll click on charting, and then right there, splits right next to historical prices.
Ooh.
Right up top to the left under Seeking Alpha.
There we go.
Yeah.
Okay.
So they've had
so
four
they split
splits.
it a few times.
Yeah.
It's been almost a couple decades since they've done it.
It's been a while. So, hey, I might eventually have another one coming up again, Get that share price down. Trick the people into that don't know any better, and don't know any better, but they also don't know any better.
Okay, who else we got here? So Christian here is having some trouble. He can't choose between Apple, Costco, and Procter Gamble, which I don't blame him. That's a tough call. Right off the bat, honestly, I might nix Costco.
Yeah, I'm sure their PE, I don't know if they can justify that. They probably got a really high price to earnings ratio right now, and I don't know if it'd be worth.
It's consistently like above 40, right? I think the PE ratio.
Yeah, I would wait a while for Costco to come down personally, but honestly, I just know they're all good. I don't think you go wrong with either one, quite honestly.
Yeah, I don't think so either. If I really had to choose one, I'd go with Procter and Gamble. I think Costco's great business, but man, it's perpetually expensive. It would take something serious for that stock to become more discounted. Who else we got here? Tara said that she's getting some Johnson & Johnson for the spinoff, looking to grab both of those. And I was going to ask this earlier, man, like when they do split or spin off, that consumer company, do you think you'll hold on to the new company, or you think you'll sell out of it? It might be too soon to tell either, but
I think I'm going to hold on to it.
Yeah.
I know it's not a core part of their business, and it's going to be interesting to watch. I think it'll do okay over a while. I think it'll hold its own. I mean, I don't remember every brand, but yeah, that's going to be all your I think Listerine and obviously the Band-Aids, and they got a ton of stuff. I think Neosporin, I think they own.
Mm-hmm.
They own
Listerine,
a ton of stuff.
I think
Listerine. I think it's Listerine.
Yeah.
If not, we're just giving all this wrong information. Yeah, they own everything. They own, Swatch Watch and Trapper Keeper and Canon, whatever you want to throw in there, they own it. Yeah.
So Bill, moving on here, Bill says he's going to pick up some MPW and Skyworks Solutions, both of which are looking pretty good right now. MPW has definitely been at a discount. I just talked about Skyworks Solutions a couple of days ago. That stock's looking really good as well.
Yeah, I've never tore into either of those. Skyworks wasn't. Who was it that had all that problem? Wasn't it Medical Properties Trust? Right? Is that MPW?
Yeah.
That had their tenant. But I know they just came out with. I saw a blurb that they had something good. I don't know what it was. I don't know. It'll take me a minute to find. But yeah, there was something about MPW that Hey, how about AbbVie? They raised their dividend today, and Exxon
Yeah.
did too.
How
For
much
everybody.
of a raise did AbbVie announce?
It was 5%.
That's
So
nice.
it's going from $1.41 to $1.48 per quarter.
Man, I haven't bought AbbVie in a long time.
Yeah, they've raised their dividend by over 250% since their inception in 2013 when they were spun out
Abbott,
of
right?
Abbott Labs. Yeah.
Yeah. Have you ever looked into Abbott? Have you ever considered investing in that?
I've been inside Abbott and I've been inside AbbVie, but I have not. Fun thing, when I first started the channel, I remember doing something that I don't know if I ever turned it into a video, but I bought. So the company I used to work for, which we actually might be going back into AbbVie up in North Chicago, like their big complex where, dude, it is crazy. I mean, you guys are gonna hate to hear it, but there's like areas that you can't go into because they do like, I don't know if it's testing on animals, but they're like have animal facilities and it's super secretive. Um, but yeah, back to that. Ab, Abbott has a lower dividend yield, I believe. They're still solid, but AbbVie is just a different structure. I think AbbVie was supposed to be like the global. I think I don't remember now. You guys can help us out. Help me out. Help a brother out.
So I think the difference here is, I mean, you're right. Abbott has a lower yield, just under 2%, but they have a really high growth rate, over 12%. So
Yep.
the dividend growth is definitely there compared to AbbVie, who has a higher yield. Well, actually, dude, AbbVie is winning in both departments. Higher yield, okay,
Yeah.
3.67% with a 17.25% 5-year growth rate. So they've got about 5%. They've got about 2% on, over Abbott in terms of the yield, and then another 5% in terms of dividend growth. So
Yeah, I should revisit that. I read it years ago, the difference between them, like why they spun out AbbVie. I think it was, I don't remember. I don't want to say. I'm stumbling now. I'm stumbling and bumbling. So, yeah, but still both good companies, both really good companies. And yeah, I bought some AbbVie while working at AbbVie. That was a fun day.
you just got inspired or what?
I
You were
did.
like,
Oh, I was
this is pretty cool. I think I need to buy a couple of shares.
Oh, I was walking around. I was like, all you people work for me. I'm your boss. And I'm like, look, I just bought one more share, so I'm now even more your boss. So I wanted to. No, I think the contact though. My contact. I told him that. I was like, dude, I'm like, I'm your boss, and he was confused. It's like, what? It's like,
You actually said
I
that to
told
him?
Yeah, he had no idea what I was talking about. And he didn't. He was just somebody that does it. Yeah. I was like, you do anything with stocks? He's like, no, I'm not at all. I was like,
So
oh,
he
well, you
wouldn't get
guys.
it.
Yeah. Yeah. I was like, well, you're. I'm like, you guys have a really, really good dividend stock. He's like, I don't know what that means, but yeah, I did tell him jokingly I was his boss. So
Man, doesn't know what that means. His loss, man.
yeah, isn't it funny? He had no
Yeah.
clue, but hey, I don't know. Maybe more power to us. We need to
I
spread the
don't know.
word.
And on that note, man, I I see investing growing in popularity. I don't know about you, but I see this, at least online. I see a lot more people getting involved with stocks and real estate and reaching more for financial freedom. And man, I'm very interested to see what these next couple of years look like for the finance industry, especially what we're doing on here. But there's a lot more people getting involved with this stuff and understanding the importance of investing and how to do it. So I don't know if you've noticed the same thing, but I think that's pretty cool.
Yeah, I think so. I mean, I tell everybody that I can about it. Not like, obnoxiously in people's faces when they're walking down the street or something, but at Starbucks, I'm like, do you even know where you are? So, yeah, like Kevin Burgess, it's funny seeing him in the chat made me think that he's already financially independent. He's already reached that point, and it looks different for everybody. It's going to be different for everybody. But for me, what it means is to do what I want, when I want, with who I want, on my own terms. I think it was Morgan Housel I heard an interview with, and he wrote The Psychology of Money. Really cool, because he said that people sometimes don't understand it because he has younger kids, and he would like all day Wednesday, he would take off just to hang out with his kid or do whatever. But sometimes he said, I'll work 13 hours on a Sunday because I'm working on something that I want to work on. And it's just, I think that's where I'd like to go someday. And I don't, hopefully it'll be, a few years. I'm working, I'm building, but I think that's what it is. Doing what you want, when you want, with who you want, on your own terms,
What's kind of your plan again? You had you had some sort of like financial freedom, like some sort of fire goal you were trying to reach, right? What was it?
I want my work to be optional at 50. So what I'm doing now, servicing, welding, installing, loading dock equipment. I want that to be completely optional on my 50th birthday, which isn't that far away. I'll be 45 in April. So, I've got 5.5 years or so, and it's really crazy how fast things pick up. And, that's what I want. I don't know if I'll keep doing this. I may do it because I like driving around. Some days, some days suck, but I work by myself. I don't have a boss breathing down my neck.
That's so cool. So cool, man.
Somebody just tuned in like, what the hell is going on? But there's parts of my job I like, dude. These right here, these things all day. It's probably why I have bad tinnitus, but I listen to podcasts. I listen to books, and I get to work. I get to fix things. So there's a sense of satisfaction that something was broken, and when I leave, it's working. And by the way, enough about me, dude. You got a super chat from Steven, man.
It just came in. I was gonna let you finish your thought before I put it on.
No,
the screen,
cut me off. You cut me off when you get those, man.
Well, first of all, Steven, thank you so much for the super chat, man. That's incredible, and that's just awesome. But Steven wants to know, or has a question, can you guys talk me into / out of averaging down on Verizon? My cost basis is around 50. What would you do? Okay, so first of all, I haven't looked at Verizon for a while, so let's jump over to the screen real quick. I'm going to put Verizon on here. Russ, you want to take an initial stab at this? So the current share price is $37.67. Should Steven average down or no?
Well, you'd like to say that a lot of their, I don't know, you'd like to say that it's cyclical and it's sector wide, but if you did a chart comparison with T-Mobile has just been eating Verizon and AT&T's lunch. I do remember reading that Verizon's churn is dissipating, so they're hanging on to people, or they're hanging on to
customers,
their users, their customers. But let me look at their pull up some stats. Let me pull up. I'm just curious what they're.
We'll put them back on the screen. So, I mean, you guys can see just from the chart right here, since August, they've had a pretty steady decline from about $45 a share to where they're at now. And I could be wrong on this, but I think they've dipped even more lately just from AT&T's earnings. When AT&T announced, really pretty positive earnings, better than Verizon's, I think that knocked the share price down a little bit more. So, interestingly enough, like right now, at least from my perspective, from what I've seen, it seems that Verizon, the sentiment is not as strong around Verizon right now compared to AT&T, which is probably the first time this has been the case for some time. And my prediction is that, and I'm a Verizon shareholder as well, my prediction is that they'll still be around, handful of years from now. And I think like Zaldath said right here, this is, going to be just about one of the best valuations you can get out of Verizon right now. And it might continue to go down, who knows, but it's looking really good right now. So if you want to build out more of this position, I think now's a pretty good time to do it. And
I think you expect much growth of the company. And I was just looking at a few stats that their free cash flow payout ratio right now is 99%, when it's been around 60 to 52% the last few years. But yeah, their free cash flow per share dipped a little bit. Their earnings have dropped a little bit. Sales are down 1% last 12 months. That's only 1% growth. but their sales are still going up, $136 billion. But like their return on invested capital has been coming down since 2018. So they're definitely hitting some headwinds. Their net debt 67%. It was as high as 91% in 2014. So, they got some headwinds. They're trying to figure some things out, but I don't. And by the way, Simply Safe gives them a safety score of 87, which is very safe. But I'd agree. I don't think they're going to go anywhere. And I guess you would ask yourself, do you think that they're going to still be making money? I know they just invested in the Spectrum, was it C-band Spectrum? And they spent a ton of money on that. So that's why I believe their payout ratio is really high. They're going to be paying that down for a minute. But I think a lot of the telcos, dude, they didn't invest in that fiber quick enough. I think because it's so expensive, I think people might have been questioning, why are you going into that? But like the coax, like
AT&T seems like they're really hustling to do that right now.
Yeah. Oh, dude, here you go. You got another, I don't know what the yellow is.
From Katie here. Katie had another comment that I want to put up on the screen after this one. But Katie, thank you so much for the super chat. $10. That's unreal. Thank you so much. So Katie says, why is no one talking about BLK, which is Blackstone, right?
BlackRock.
Or is that BlackRock?
Yeah.
BlackRock. Yeah. So they're an asset manager that runs ETFs and growing like mad and buying back shares like crazy. Their dividend growth rate is also impressive. So admittedly, I have not looked into this company for myself, but let's take a quick look real quick. I mean, Russ, what do you know about BlackRock?
Well, right now their forward PE is 20.9 when their 5-year average is 18. Their dividend yield, 2.94%. They've been growing that dividend uninterrupted for 12 years growth streak, 18 years uninterrupted. Mm-hmm. And yeah, this is another one I haven't tore into too much. 61% free cash flow payout ratio.
The dividend stats are not looking too bad, kind of like you said. Price to book's a little bit high, considerably high compared to the rest of the sector. And it's right in line with where the company is at a 5-year average in terms of price to book. Kind of like Katie was saying, revenue is definitely growing big time. Revenue and gross profit. It looks like they have a gross profit margin about 50%. So that's not too shabby. And furthermore, to Katie's point, buying back shares like crazy. That's
14%. They've reduced their shares 14% in the last 10 years. So
okay, is that CAGR or is that just across all 10 years?
That was just going from 178 million outstanding in 2012 to 153 million right now.
Okay, the book value per share is going up pretty nice. So it does look like there's a lot of good stuff with BlackRock. And to answer your question, like why is no one talking about them? I don't really know. I don't know, but it's definitely not one that's actually, I do have an idea of maybe why it's not talked about as much. So BlackRock asset management company, so is T. Rowe Price and Franklin Resources, ticker symbol BEN. Both of those stocks are way cheaper than BlackRock right now, just have better valuations and might even have better dividend stats too. Like looking at T. Rowe's dividend stats, and I'll put this back on the screen.
Zeldath just said what I was thinking, that it's probably the assets under management that people have been pulling out. And if I think we're heading into a recession with the Fed. It can take months for their rates. This is why I think they should have either hit their terminal rate all at once or just raise and then don't do anything for 6 months and then raise, don't do anything for. So I think I read it takes 3 to 6 months for those rate hikes to work their way through the economy and really show what the effect of it is. So I think we're going into a recession. And if that happens, then I think that's why T. Rowe and like you said, BlackRock, I think that's why they're in Zal. Thank you. Their assets under management are going to take a hit there. So yeah.
And
wait, my mic is too loud? I can turn it down. Shaping who? Russ?
It could be me too, because I'm like right here, just caressing the mic.
My family tells me I'm a loud talker, so it's probably mine. I'm adjusting my my interface here. If that, I don't know, did that help or?
So I want to put Katie's other comment on.
Yeah.
I'm going to find it right here in the live chat. But you're going to like this one, Russ. So has Dapper been working out? Did you see his arm?
No, I do exercises, dude. I'm 45. What? Oh, dude, like 5 minutes. That's my daughter. She won't come here and say hi. See? Well, you got to say hi. Forget it. Anyway, if I no, I can't get in.
Look at those pythons.
Yeah, I'm a tall, skinny guy, man. I'm 6'4", 182. But
dang, man.
what is
so
a
I'm
dapper?
I'm 5'8". I'm about 5'8", 175 to 177, depending on how much In-N-Out burger I've had the night before.
Dude, my whole life I've been, shaping. Now this is gonna bother me. Sometimes it's really loud. I don't know how. I'm gonna have to adjust that next time. We didn't hear who it is. Is it me?
Zal says Russ is louder than Ryan.
Ah, okay. Did it? I don't know if that did anything. I turned my interface down, but good. You guys should let me know earlier. Now I'm gonna lose sleep over this. You're gonna keep me up. I'm gonna be awake till 3 a.m. thinking I'm blowing people's eardrums out.
See, like this, going back to AT&T and Verizon, that conversation. Kevin, his sniffers pointing him in the direction of AT&T recently, and when Kevin catches a whiff of something, it's going to be good. So AT&T has definitely put out some good stuff lately, and it's interesting seeing the sentiment around this stock begin to change after so long. You sold out of all your AT&T, didn't you?
No, I still got it.
Okay.
I'm down. It's one of the positions I'm down most on.
Maybe I'm thinking Intel. Did you sell Intel?
No, I still got Intel. JPM, that's the only one, but that was I still have my original 10 shares, so I still have that. But yeah, I haven't really sold out of anything. All the one. Oh, 3M, that's what I sold out, but just in the taxable account because I'm tax loss harvesting early. I'm trying to beat the rush, man. And I might buy back in. But now, see, I get married to stocks because I put that money, and it almost worked out perfect. I sold 10 shares of 3M at $109, and then I bought 3 shares of Norfolk Southern and 3 shares of Union Pacific, and those have both gone up. And I've never owned any rail stocks outright. So I was using those as placeholders because if you don't know, the way that the tax loss harvesting works is you can't buy the exact same thing for 31 days. So I was thinking that even if I'm up, then I'll just sell those and then buy 3M again. But if 3M's cheap enough, I might just buy another 10 shares just, every week or something, just till I get those 10 back.
Yeah, man. I haven't heard anything about 3M for a while, but I kind of decided, if it gets under $100 a share, maybe throw a little bit more into it. But I was kind of looking at the diversification in my portfolio the other day, and man, I've got more industrial stocks than I think stocks in any other sector. I think I have 3 or 4 different stocks just in industrials: Lockheed Martin, 3M, Snap-on. And there might be one more, but man, Snap-on, man. Now, did you see their earnings recently?
I didn't.
I think it was pretty good. Actually, we were kind of talking about this on Sunday on your live stream, weren't we? A little bit.
Yeah. That's because I've been buying more, and I was hoping that they would be down. They never do, dude. It's crazy. I have to keep waiting, and I gotta go. I don't know, full bore next time. It's like crazy. They were just at 201. I think I bought that share at I bought one share at 202.95, I think. And now today it's like pushing 220, just like that. Like they move quick.
Yeah, it's 219.55. Just in the last week, they've jumped 4%. In the last month, they've climbed 7%. So, and year to date, they're actually up. Year to date, they're up 3%. So, they've been doing pretty well this year.
I like them. I work with tools too.
Them and Lowe's, man. Those are two that I can't seem to get enough of. I'm working to get my top 5, my core positions to be Procter Gamble, Lowe's, Starbucks. I'd love for Snap-on to be in there, and then maybe one more I think right now Realty Income's in there, but maybe like an Altria Group or something along those lines.
I didn't see Mountain High said don't do it, Russ. I don't know what that was too.
He
Oh, that's
might
kind
have,
of funny. Katie said, "Oh wait,
right here.
Dapper is married. Never mind leaving." Oh my God, I'm an old guy, dude. Don't let this young baby face fool you. You know, my wife. I've been with my wife since the year 2000. 2000. How old were you in 2000? I don't do
7.
math well.
I was 7. Well,
Huh?
6 for some of it, 7 for some of it. When's your anniversary?
It is November 26th,
Okay,
2000.
I was 7 then.
Yeah. I mean, we got married in '05, but
Man, so you got a few more weeks coming up to your big anniversary then, huh?
yeah, we're gonna do something. We might head up to the MKE, Milwaukee.
Mm,
We love going out, dude. We might go out tonight. We were talking about it because we're doing Sober October, and we might go to a dance club.
okay.
Sober. I love
Have you ever
dancing.
done silent disco?
No, it looks insane. People look like they need. It looks like I don't know if I could say that now. I was gonna say it looks like a bunch of lunatics escaped the asylum, but that could be. I don't know. Everybody gets offended at everything now. But no, I've never done it. I've looked at it. It might be fun.
Yeah.
But yeah, you watch people dancing with no music, and it's like, what the hell?
I mean, obviously, if you don't have the headphones on, it's not going to be fun. I've done it once in Mexico, but even with the headphones on, I was like, man, can't we just put it over the speakers? I don't know. I don't get it. Personally, I don't get it. It's better just play it over the speakers. The energy's better.
It's a gimmick, man. It's a gimmick.
Yeah. So, anyway, man, I think this is a pretty good place to wrap up this stream, don't you think?
I think so. I think so because my kids they want to watch a movie or something. I'm hogging the where we have our the big TV down here. Damn kids! I got teenagers. You live with teenagers. See how it goes.
You got your hands full. I got my. You guys can't see him. I got my little teenager just laying right over there.
Oh, Peanut.
Yeah. So anyway,
Yeah.
yeah, guys, we're gonna wrap it up here. But thank you so much for tuning into another Dividend Happy Hour. It's always fun. It's always fun when you come on, Russ. It was a great chat, man. Thank you for doing this.
Anytime, man. I'm always available. Well, I'm usually available. You know how it goes.
Couple last things before we sign off, guys. If you have not done so already, please hit the thumbs up on this video. Go hit that like button for us, and subscribe if you're not already subscribed to the channel. And last but not least, guys, sign up for my free investing newsletter. I just started doing it. I put out one edition so far. I put it out on Tuesday, and I'll be releasing new editions of the newsletter every single Tuesday. The link is in the description to sign up. Once again, it's totally free. Just go click the link, sign up for the newsletter, and I'll send something good to your inbox every single Tuesday. So definitely do that. Hit the like button. You guys say thank you to Russ for joining us tonight. It's always fun having him on. And you guys have a great weekend. Stay out of trouble, and we will see you in the next one.